Hi, welcome to the market view for Monday the 18th of August 2014, and starting off with the 30-minute chart, we can see that the market was once again stuck in this sideways proverbial pattern. We had a sell signal which was filled, and then it resulted in a 13-point loss. I'll just mark that up for you. You can see there, 13-point loss, as the market just wouldn't go anywhere. It was filled at 8:30. And then, of course, the market was waiting for the advanced GDP figures, which came out as forecast 0.8, and we see the market then reverse and go above the stop-loss price, struggle at the left-hand side there, and then just wound its way sideways for the rest of the day with another 1, 2, 3, 4, 5, 6 potential signals there, and everyone failed to qualify. So again, you can see that the market is so sideways that it's not even filling most of the signals, and when it does at the moment, it's reversing and moving back to the other side. The only consolation in this is that at least the losses are very, very small because of the narrowness of the trading range. And this was the same in the 60-minute chart as well. You can see there the market exactly the same, just trading sideways. The GDP figures bringing the market back up after slowly moving down. If it had come out worse than forecast, of course, we would have gone down towards this area, but that wasn't to be the case. In the daily chart, a bit of a mess here, and that's because if I just go back to the 30-minute chart, we have a look at today, you can see the market's gapped up on the overnight and is trading to the upside. So this is why the daily chart looks like it does. Just remove all of these fibs that we've got on the chart. We don't need any of these at the moment as the market's through them. And again, we're looking at the sort of the 167 area where the market has found support, and it's leapt above it at the moment. Let's just draw in some upside targets just in case the market continues to move. We'll go from the high of this decent sized bar down to the low of Thursday, and then draw in there. We can see if the market's going to come up to this area and stop. So on the news front, to try and move the market, I'm afraid it's not good news on that either, because we don't have any news that's likely to move the markets apart from the NHAB index at 3 p.m. is a possible, but again, don't hold your breath, medium impact news item. So again, I expect a fairly quiet, narrow trading range unless anything on the geopolitical front happens to hit the markets. In the Dow, let's just have a quick look at this. Talking of geopolitical events, this is what happened on Friday. The market was sideways and quiet as it had been for most of the week, and then according to Bloomberg, there was a small scuffle between Ukraine and Russia, and this sent the market down 160 points, of which, of course, then when it was determined it was just a minor scuffle in the playground, the market was brought back and it was only down 50 by the end of the close. Interestingly enough, we have some professional buying confirmed for the day before, which is interesting. And the market trading through that 76% that we drew in, and then trading back to the downside. And in fact, I should imagine that from here to here is bang on the 76% where the market stopped, and it is so. Again, no surprise to me after years of marking these charts up in real time and just rolling back to the different levels. You'll find that the market trades to these areas. So the Dow, bit of an interesting day based upon whether it was genuine news or not. I have no idea. Probably propaganda, which seems to be the mainstream's approach to news these days. And in the implied volatility, really giving more of a clue, it only rallied up to 10.39, so not a great deal of an increase there. So the implied volatility, which is more of a better barometer than Bloomberg news, shows that it wasn't much of a news item really, and also the historic volatility moved to the downside. Probably just a way of shaking people out of their positions as well. Well, that's the news from me this morning. It's not as cheery as I would want it to be, but again, there's not a lot we can do. We are in August as well, just to add to the prospect of further sideways trading at the moment because of most people being on holes, and also the US vacation time as well. So again, it's just a matter of being patient and playing the waiting game. But Friday with the Dow, there was, say, a bit of a move there on the geopolitical news rumour mill, and it aided in allowing the market to have some volatility back into it. Right, well, I will see you tomorrow. Have a good day. As ever, thank you for your support. Very much appreciated. And as ever, thank you for watching.